following is an update and technical analysis on natural gas futures, also known as the Widowmaker, based upon the daily interval in which I had mentioned on the 21st of November 2023, we're trading spot price 2.856, and I had remained adamant that long traders and or bull traders needed to defend the bottom of this gap support in correlation of the 382 Fibbs retracement, as well as in confluence of the bottom of this trading range and channel, major primary reactionary uptrend line in correlation of the 382 Fibbs retracement, call it the bottom of the unchecked ungap, and watch for that next out of the line of a nice clean daily breakdown, sell signal, and a potential backtest and or retest of this key inflection point, offering the utmost great risk reward ratio, short trade setup to the downside to retest the 200-day moving average and honing in onto the first target, call it the 2.53 price, call it monthly price support level, and that would be the additional first and second target for any key inflection points with waning momentum indicators within the moving average convergence crossing over its zero line threshold, having the oscillator completely crash below its zero line threshold in a negative 465 read. And you already had stochastics 1033 already collapsing throughout that key inflection point long below its zero line threshold. We had put in a well-defined, beautiful divergent high. We had negative and bearish divergences really constructed on all four technical momentum indicators, only the increasing the odds of a much larger drop to the downside in formation of the beautiful, well-defined head and shoulder classic looking top. And here's the update. Where we had that first initial breakdown sell signal, we had a secondary additional breakdown sell signal, we had that snapback and or counter trend rally, and for 3 days in a row off of a multitude of reactionary major highs here, offering a great risk reward short trade setup to the downside, knocking that first target at the 200-day moving average, ultimately undercutting it, and the entirety of that trade was good for, call it a 10.33% crash to the downside in a double-digit all-out full-blown sell-off. And I am anticipating a substantial price swings within the dynamic natural gas futures market within the upcoming weeks. The current price, under these current price levels, I find support from both seasonal factors and the ongoing conflict in Ukraine. Despite starting the high demand season with natural gas prices considerably lower, this situation may serve as either a cautionary signal or a lucrative opportunity. The low U.S. natural gas prices entering the peak winter period are influenced by bearish inventory trends and stable European prices, with the natural gas market susceptible to abrupt shifts driven by a significant number of trend following shorts. I can all but guarantee you a ton of shorts are packed in who saw the exact same thing: algorithms, institutions, hedge funds, all packing in short, and uncertainties surrounding weather patterns and demand in the months ahead, and an extreme potential volatile in both directions. But we are now beginning to hone in on what I call major monthly, call it multi-decade price support at the 253, spot price 253 with additional reactionary highs all across the board. Upon zooming you out to the much larger picture within the monthly interval, the 253 has been safeguarded in multiple reactionary highs, historical reaction really across the board, call it multi-decade price support here with just a huge multitude of reactionary highs really across the space there, especially going back into the early 90s, into the mid to, and again, just a psychological level upon coming on to retest this key inflection point where we had this huge spike counter trend rally upon revisiting the 50-month moving average, only to be rejected impulsively right off that key inflection point. And here we are honing in on to big monthly price support level. Long traders, bull traders need to defend this key inflection point really at all costs, resetting some of these key technical momentum indicators for a nice refresh. You have a potential big, extreme widening of the gap between the moving average convergence and the 1226 close 9 here, ready to cross over. And if we get that crossover in a complete, if we start to rally, if long traders, bull traders defend this key inflection point, honing in on through the winter, you will have a potential bullish crossover in the monthly time interval, only increasing the odds for a long trade setup. Call it an extremely aggressive long trade setup, in which this could be the beginning stages of again, an additional, much larger picture, head and shoulder, classic looking top, where the right shoulder begins to sell off, breaking down below the 253 price support, honing in onto 211, and then additionally 194 price support, which would really ultimately be more so the neckline of this much larger picture within the monthly time interval. And zooming you back into the daily interval, we are testing this key inflection point as of now with even a potential for a whipsaw-like reaction, false bear trap to retest and re-challenge the 236 Fibbs retracement, call it 246 spot price support. And if and when we go on, it would be a nice reflection, great, more so a risk reward ratio, great risk reward ratio to the long side, a potential move to spur any sort of health back into these key technical momentum indicators. None of this being financial advice, trading, the Widowmaker, reasoning. The moniker given to one of the pivotal energy commodities holds true for a reason. It's pronounced beta-driven fluctuations have the potential to swiftly and dramatically impact in either direction, posing a substantial risk.